Good afternoon, Matt the Mortgage Guy here, making a video, Loan Estimate Explained Purchase Edition. I made one of these for refinance. I'm making one for purchase. They're fairly similar, but a couple different things. And so ideally, you have questions on a loan estimate, whether it come from me or come from any other loan officer. And so you've got up on your screen, loan estimate, and you just need some clarification. Hopefully this video provides that clarification. And I'll go over the first page in detail. I'll talk through it. Hopefully you have one sitting in front of you. And any questions at all, please feel free to reach out, whether or not I'm doing your loan. So up at the top left, you've got the date issued, you've got the applicant's name, the property address, the sale price, and then to the right, it's got loan term, purpose, product, the loan type, and then rate lock. Now that's important because when you talk to the loan officer and you're making a purchase, sometimes the loan officer will advise you, hey, listen, we are gonna get this loan over to my processor. He's gonna send out initial disclosures. We're gonna lock it. We don't want to worry about the market fluctuating. We've got a 3.25% for you right now at par. It's not costing you any points, and that's really good. Let's not gamble with it. Do you agree? Yes, I agree. Okay, locked. And you'll see right there on the top right, it's locked, and it tells you when it's locked through 5/11. And this contract is scheduled to close on 5/4 or 5/8 or whenever it is, and so you're good to go there. So that's that. Then you get down into loan terms, exactly like you would expect. It's got loan amount, interest rate, monthly principal and interest. Now that principal and interest payment, you should know, doesn't include taxes, insurance, mortgage insurance, and whatnot. That's what you see down in the next section that says projected payments. That breaks it down. That principal and interest payment, mortgage insurance, estimated escrow, which is tax and insurance, and then your total payment. If you're doing a loan where you're waiving that and you're paying your tax and insurance separate, then you'll just see that principal and interest payment there, but that's where it will show whether or not you're paying those things through your mortgage. 99% of people do. So if you're thinking to yourself, oh, maybe I should pay my tax and insurance separate, there's really no good reason to, unless you really, really enjoy twice a year sending money to the county for your property taxes and once a year for your homeowner's insurance. Just pay a little bit per month, let the mortgage company take care of it. They're not allowed to hold too much of your money, so that's enough on that. Bottom of this page, very important, estimated closing costs is what they call it, but really it's loan costs and other costs. In this case, where you're setting up those escrow accounts, taxes and insurance being paid through your mortgage, a big chunk of this is that. Setting up those escrow accounts, it's your money. You're prepaying into an account, funding this account that's gonna pay your tax and insurance in the future. So loan costs is probably more important. You can see kind of what that costs you. Other costs is setting up those escrow accounts. We'll go over that on page 2. Estimated cash to close. A lot of people see this and they go, hey, is this cash to close number, does this include my down payment and my closing cost? The answer is yes. This is what your cash to close number is. Now, if on our loan estimate, we have a $5,000 EMD, that's already been subtracted. So this $23,613 that's on this specific one I'm looking at, when it says estimated cash to close, is exactly what you're gonna bring. Numbers will sharpen up and this won't be the exact number when you get to the end, but this is what it's reflecting, is the number that you're gonna owe at the end. The wire you're sending to the title company or the cashier's check you're bringing in the title company is your estimated cash to close. Okay, page 2. I don't want this to be too long-winded of a video, but I do want to make sure that I help folks out on understanding this. Loan costs are on the left. A is the origination charges. Now this is where you'll find any points being charged by the lender. A lot of times if you work with an online lender, they're 2.99% rate, smoking rate. And then you look in that box and you see they're charging you 3 points, otherwise known as 3% of the loan amount, otherwise known as not usually a good idea. So look out for that. But this is the box A. Any lender charges are there. Everything else is third-party fees. So this is the only thing controlled by the lender you choose to work with is the points. They might have underwriting fee, processing fee, admin fee. They'll call it a bunch of different stuff. That'll show up in this box. In my example, I've got $10.55 for underwriting, only fee being charged by the lender, and there's nothing in there for points. So there's no points being charged. B, we've got the appraisal, credit report, flood cert, tax service. Now, when you get a loan estimate, some of these numbers will be kind of high. My credit here says 60. We know when we get to the final closing docs, it's gonna say 31. That number's a little bit inflated in case we have to pull it a second time, in case we need to do some sort of rescore. It's there because we can't change that number higher later. So it's like a just in case type of number. And down in C, a bunch of title fees. You've got endorsement, mobile notary, loan service fee, lenders, title insurance, settlement and closing fee. So that's all there. And then D, on the bottom of the left side on page 2, is the total of all those costs. Now, with a refinance, it's important to look at this number because it's the true cost versus the right side being some prepaids. And this is how you kind of analyze whether a refinance is worth it or not. With a purchase, the analyzing is a little bit different. We won't even go into that. So on the right, other costs, E, taxes and government fees. There's a $175 recording fee, and then there's transfer taxes. Now, here's something important to note. The way that most lenders send disclosures, let's say the seller's paying for the transfer tax per your contract. Let's say that the seller's paying for some of these title fees per the contract. These fees still show up, and that's how they have to disclose it. You know, the settlement and the closing fee is still there. The $439 in transfer tax is still there on your estimate. You've got to go all the way down to near the bottom of the right-hand side of page 2 where you see seller credits. And over there, seller credits says 911. Now, don't ask me why they do it this way. It makes it confusing as heck, but I'll tell people what you have to do is you've got to take half of that number because they're paying for half of that title fee. And then you got to take the $439, the transfer tax, add those together, and that's what gets 911 because the seller's paying for it. We have to disclose the cost of it to you, but then the seller credit offsets that down there. So it just is what it is, man. That's how the powers that be who make these forms do things. F on the right side is prepaids. And like I said, if you want a good video on what escrow accounts is, type that into YouTube. I think I've got a video out there somewhere what escrow accounts mean, how they work. But prepaids is a good word because you're prepaying into an account that's later going to be used to fund homeowners insurance and taxes. So depending on what month we land in when the next tax bill is due will depend on how much this initial escrow payment is going to be at close. They might hold 2 or 3 months of reserves on the homeowners insurance side after the full 12-month premium, and they might do 4, 5, 6 months of property taxes based on what month you're in. The month we're in determines that. Okay, H, we've got some other stuff, a home warranty, natural hazard fee, owner's title policy. And so that's that. These total other costs get tallied and there's a total for that, plus the loan cost on the left. That all comes together. And then what you've got is your deposit. In this case, it looks like it was $6,000. And your total cash to close, which we saw on page 1, was the $23,613 after the $6,000 and the seller credit and other adjustments have been accounted for. So that's the gist of it. Any questions at all, please feel free to reach out. I know that they could have done a better job making this thing less confusing. If you want to know anything about page 3, it's really not much on here. It talks about your loan not being assumable. It talks about their plans to service the loan, kind of some mumbo jumbo. The numbers that are shown here are interesting. They talk about in the next 5 years, here's your total number of payments, and here's the total number of principal you'll paid off. The cool part is in 2020, and probably for the foreseeable future, with rates as low as they are, you're paying a good chunk of principal in the first 5 years. When rates were 6%, 7%, 8%, that number you paid towards principal was sad in the first 5 years. It was all interest in the beginning, but at least you're chunking off a little bit of principal when you've got a rate in the 3s. APR, annual percentage rate, that's also in the middle there. Know that that's the costs over the loan term expressed as a rate. So you're like, wait, you told me my rate was 3.25. Your interest rate is 3.25. What your payment is based on 3.25. This APR takes all the costs and expresses it as a rate. if all those costs were factored in, okay? Total interest percentage, a number that shouldn't really matter to you, but you borrow 400, you pay back 600, they're gonna say your total interest is 50% because you're paying 50% total interest versus what the total loan amount is. Hopefully that clarified some things. Any questions at all, please feel free to reach out. Loan estimate, not the easiest thing to read, but I think they did all right. I think it's more straightforward than some of the old mortgage documents used to be out there. And the good news is, as things change in the loan, this loan estimate gets updated. The closing disclosure that comes towards the end, same exact format. So it reads exactly the same. So you can see, and it'll actually show you how things have changed from your initial disclosures to the closing disclosure once you're there. So any questions, ask the loan officer you're working with, or give me a holler. Thanks for watching.